let's focus on the economy, because that's been a big issue recently with the IMF's comments about monetary policy. Some see it as criticism of the way the central bank has tackled monetary policy. I think two things stand out for me. The issue about the value of the naira, the IMF implying that the naira is overvalued and there was a need to bring it down. And of course, there's the issue of interest rates and when the central bank decided to tighten last year, implying that we should have tightened much sooner. What are your thoughts on the IMF's comments?
Right. Well, if we take the exchange rate first, I guess the IMF is looking at the naira as overvalued because of the pressure on reserves that we saw last year, the reserves depletion. I don't agree with that view because nowhere in their review did the IMF mention the European sovereign debt crisis, for instance, that puts an external color, a foreign color on the reserves, on Nigeria's reserves, rather than a domestic pressure. So I felt it was the foreigners needing their money in the face of liquidity back home that accounted for the excess demand that we saw on the foreign exchange market that led to reserves depletion. And I think Nigeria did well by using its reserve to meet that excess demand so that foreign problem doesn't translate to instability in the domestic value, in the naira value. So I don't agree with the IMF. I don't think the naira is overvalued. I think there was problem around the world, and Nigeria did well to use its reserve to cope with the pressures on its capital account and not letting it affect the exchange rate. On the interest rate, I had the IMF linking fiscal expansion, saying that fiscal expansion may put more additional pressures on the central bank to hike interest rates. I also think that the IMF, analysis of the fiscal situation lacks rigor. They were talking about nominal growth, in the
public spending
budget, in 2010, but we had crisis. We were affected by global crisis in 2008, 2009. The benchmark oil price was dropped as low as 45 in 2008. It was eventually raised in 2009, but dropped again in 2010. We were still doing 60. Now, so what do you expect in the year after the crisis? So saying 30% expansion in budget doesn't relate to the fact that the naira was devalued by 25%. You take 25 out of 30, you have 5 left. You have to account for real growth. The budget has to keep pace of real growth. The budget has to keep pace of inflation. So I think that the fiscal situation was exaggerated by the failure of the IMF personnel to relate the budget to the GDP. You should talk about fiscal expansion only in terms, only relative to the economy. So are we talking, budget to economy ratio that is rising or is falling? In my view, I think the budget to the economy ratio might well have been falling. So I think it's exaggerated. Now it's about fiscal excess, especially when it's unrelated to how that fiscal expansion is, financed. Because if it's financed by bond issuance, there's no
But let me take a quick point from you on where we are with the exchange rate right now. Obviously, oil prices are well over 100. We have the situation in the Middle East and North Africa coming much, giving everyone cause for concern that we might see a prolonged unrest.
High oil price.
So oil prices, there's a view that we might see these oil prices where they are, or even higher. Even some are saying $110 to a barrel. With that, in that context, where do you see the naira? Do you think there's any case for appreciation, for instance?
Well, the last episode of note in the naira value was the 25% devaluation that we saw December 2008, January 2009. Now, since then, the oil price was at 45. Since then, the oil price has more than doubled. So is the IMF expecting the naira to depreciate in the face of an oil price that has doubled? So I do not think that the naira is overvalued. And I do not expect the naira value to be weak. I expect some appreciation, as a matter of fact.
Let's focus on monetary policy now. Obviously, the inflation numbers came out last week, 12.1%, a slight uptick. Some are saying this probably justifies the central bank's view to tighten. What are your thoughts on inflation and where we see now?
It doesn't justify the view to tighten. I do not agree. I didn't see any need to tighten monetary policy in the, since September. This central bank has implemented tightening measures on 3 separate occasions. I don't agree because the economy is not just about inflation. I think real growth concerns and employment concerns are more important than concerns about inflation. You should only tighten when you believe that the economy is close to full capacity, that the output gap, the gap between the actual growth and the potential growth is narrow enough. That's the only concern you have, is the likelihood of inflation. But the figures that the central bank gives us about nominal and real contraction in credit and, cash and deposit aggregates, and the contraction that we see, in the Nigerian stock market, do not lend any support to a narrow output gap. It suggests that you report 7% growth rate, but what's the potential? And you report 7% growth rate, does that mean 7% growth in employment? So I think we should relay more to the real tangible issues that affect the livelihoods of, households and businesses in the Nigerian economy. A credit contraction is not a time when you should tighten monetary policy.
And very quickly, because obviously you have more of a contrarian view with most of the market. Many are in support of tightening, more so because of the inflation numbers that are beginning to tick up right now.
In your inflation of rising from 11.8 to 12.1.
1 month is not enough to make
0.3, percentage point rise. You should devote more attention to whether that is a temporary spike in inflation or a permanent spike before we begin to justify tightening.